What's up, guys? Welcome back. We brought Kavi back here with Merrill Lynch to uncover the 5 things you need to know right now because the recession is a little crazy and super unpredictable, right?
No, I think that's pretty accurate. I wouldn't say it's as unpredictable as a lot of the media would have you believe, but
I mean, the first one, everyone's talking about is like this recession. I mean, what's your take from it coming from the background of like, this is what you do?
Sure. So first off the bat, this is the most telegraphed recession in U.S. history. People have been talking about that.
Telegraph meaning like everyone's just...
We've been talking about it for the past 24 months.
Is it a legitimate recession or?
Yeah. I mean, I'd say we've been in recession for some time now. Mm-hmm. And generally speaking, recessions you don't see coming.
Right.
They catch everyone with their pants down, and that's why it tanks the economy. So this is one where, when I say it's telegraphed, everyone saw this one coming for quite a while.
Well, they're talking about it like it's coming. Us in the real estate business is like, no, it's not, and then it hits us, right?
Yeah.
So
that being said, here's how we feel about it. A lot of people would say we're already there. Mm-hmm. We're already in recession. We've already seen the layoffs hit, these giant corporations.
Yep.
And really what needs to happen is valuations need to come down to attractive levels for investors to feel comfortable to start pouring money back into these institutions.
So when you're talking about valuations, you're talking about company valuations?
Company valuations,
okay.
Yeah. So that's been happening. Mm-hmm. We've seen that happening for I'd say at least 3 quarters now. Valuations have been coming down. So I'm of the camp that we're there. We're in recession already, and we really do believe we're in the last couple innings of this. It probably hits for sure this quarter, Q3. And we think it's going to be pretty shallow. We think it's going to be pretty over and done with probably by Q1 next year. That being said, I wouldn't wait for the recession to pass before trying to seize any opportunities. It'll probably be too late. Recessions are apparent basically 6 months after they've already happened because you can spot the bottom. You're not going to know while you're in it.
Yeah.
So that's why a lot of us think, hey, it's already hit.
Basically, you feel like we're going to be out of this recession early next year, first quarter, and like the worst is pretty much...
We think that there's got to be catalysts, right, to justify these big movements in the market. Mm-hmm. That being said, to see a big downward movement, you need something to break, something to go, drastically wrong. Problem is, the U.S. economy has proven to be extremely resilient, probably to a fault.
Right.
And that's why they've kept the interest rate hikes going. This has been the most aggressive hiking, cycle they've ever done.
Yeah, they were going up like 1%.
It's never happened this quickly. Mm-hmm. The reason they did that was essentially the economy was just not cooling down. So the jobs reports were still too strong. Labor was still chugging along nicely. Earnings for companies was still really, really good.
Yep.
So essentially, them raising interest rates, trying to cool the economy down, wasn't working. The economy was staying hot. So now what we're seeing is it's more than likely, I'd say I am about 95% convinced we've seen the last rate hike.
Okay.
They're talking about potentially one more at 25 bips. I don't think it's happening. I think we're done. We're probably expecting them to announce this month that the Fed's going to go on pause for rate hikes, and they probably start cutting, by end of this year, for sure next year.
Okay.
Yeah, that's what we're expecting. Their inflation target's 2%. Earlier this year, we were thinking that's not possible. We were thinking probably ends up in the 3-4% camp. They're saying they're aggressively going to pursue 2. There's a chance they hit it. Either way, I'm looking at all of this in how can I take advantage of what's going on. Like I said earlier, trying to time and spot the bottom and get in there is a fool's errand. You want to get in a little bit before so you can, give yourself the best chance of riding that leg back up. And I think that would apply, to both investments as well as, real estate. No one knows exactly where the bottom is.
But it's coming.
Yeah, we might be past it already.
Yeah, all right. Let's hope we're past it because my pocket's hurting. I'm hearing so much about BRICS. First off, what is BRICS?
So BRICS is basically this association of countries that basically rival or attempting to rival the U.S. economy. And there's been a lot of headlines lately that they're essentially trying to move the world off the U.S. dollar as the standard currency.
Yeah, I called you on that because I was worried because all I was seeing on social media was like the petrodollar is gone. Your money's gonna be worthless, all this crazy stuff. But I mean, what's the real story behind all that?
So, real story, and as is applicable with a lot of things, is what's really driving headlines here. This kind of inserted itself into the news cycle. We're not worried about it at all. Not the first time it's happened. Won't be the last. They're going to constantly try to undermine the U.S. dollar, take over. It's not happening. And
why would it not happen?
Primary reason is we're the most transparent economy out there. And I mean, a lot of people might laugh at that statement, but the fact of the matter is, say for example, China's making a play at, increasing the yuan's acceptance globally.
Yeah.
Foreign investment has a really hard time in China because so many things are, backed by the state, and they're not going to release those numbers. And if they do, you don't know how accurate those numbers are. They've been caught before, fudging numbers, things like that.
Yeah.
So again, as a foreign investor, I'm not going to move my operations to China when I know that the state might just basically copy your IP and reproduce it themselves locally, and it's backed by government funding. You don't stand a chance.
Right.
And that's why most countries are going to rather back the U.S. dollar because things might be a little uneven here as far as socioeconomic status, but you know exactly what you're dealing with.
Right.
The numbers are real, and basically where you stand. We don't think there's any likelihood countries start opting for another currency over the U.S. dollar currently. That being said, U.S. dollar likely starts devaluing a little bit, and that's really. That kind of goes hand in hand with what the Fed's been trying to do with raising interest rates. They are trying to cool the dollar down. It's been too hot for too long. With a dollar being so strong, it makes it really hard for foreign companies to come in and invest in the country,
put money into.
And it also makes it hard for U.S. companies to, vice versa, to sell their goods overseas because obviously, our cost of manufacturing is a lot higher here. So we're not going to be as competitive price-wise with companies where they can afford to manufacture things for a lot less. So, honestly, the U.S. dollar going down in value is kind of a good thing.
It's a good thing.
For everyone.
Why is that a good thing?
Because it makes us more competitive with foreign entities, and it makes us more attractive for foreign investment.
To come in, to bring their money in. Got it. Okay, so the bottom line is all that talk about the dollar becoming worthless essentially is something not to worry about right now.
Not to worry about. And honestly, I think just reframe the conversation and, sure, maybe the dollar goes down in value.
Yeah.
Is that necessarily a bad thing?
Right.
We don't really think it is.
And this obviously happens over time. It devalues, it comes back up, and it's kind of part of the cycle.
It's just the wave,
Okay. There's a lot of talk about this debt ceiling, and I had, what is this debt ceiling?
Debt ceiling is basically U.S. I mean, if you ever drive through New York, they have that giant billboard of the national debt.
Yeah, it keeps going up
in the trillions.
Yeah.
So that's essentially what the debt ceiling is. Is basically the U.S. has issued so much debt. That it's basically a big talking point, and either party loves to play it up. Fact of the matter is, it's a lot less important than people make it out to be.
So it's more of like a political thing?
Oh, 100%. I'd agree with that statement. Because yes, if the U.S. defaulted on its debt, that would be a catastrophe. It'll never happen.
It'll never happen.
Feasibly, it'll never happen because whoever lets it happen is going to get blamed for it. So whether, it's the Democrats who block it or the Republicans, they'll never let it happen. They use it as a negotiating tactic to get more of the, parties' wants and needs across the line, things that might not have been able to, they didn't really have the big reason to, take that into consideration. Yeah, they'll do it because they both have a vested interest in getting this thing done.
Sure.
So we weren't worried about it. We were never worried about it. We've seen the story play out so many times before. It goes down to the final hour, gets solved, all good. That being said, the other reason we're not worried about it is this is still the most attractive economy on the planet. I don't think there's a likelihood we get replaced anytime soon. Again, it's like, who do you replace this with?
Right.
You know?
In terms of transparency, in terms of someone that you would trust.
Yeah, and just as far as like an actual marketplace where you can come in, bring your product, sell it, you have access to all these, you know, facilities, things like that.
It's a free market, basically.
Exactly, and there's no one else that can really compete. I mean, you know, it's like China's going to try, Russia's going to try, South America's going to try. There's no one really out there. So, yeah, we're not really worried about it. Debt ceiling's actually being resolved right now.
Okay.
So that's why we've seen, you know, basically the market absolutely take off this week. Yeah, a lot of people say we're not out of the woods yet. Honestly, I don't think it's as big a deal as everyone makes it out to be. They always figure this out.
Sure.
U.S. isn't defaulting on its debt anytime soon.
Okay.
And, you know, the reason and for those, you know, wondering, the reason the debt ceiling came up is because we issued out, you know, basically record levels of capital during COVID. So yeah, I mean, we've never printed so much money before in history. And that's why we saw inflation just, you know, kind of go through the roof. And that's why we saw the aggressive Fed rate hikes happen. So it's all an intertwined story. It's all happening at the same time.
Yeah.
So the debt ceiling is kind of the repercussion of what we're seeing.
What happened?
But yeah, I mean, honestly, we're about to, once we come out the other side of this recession, we're about to enter another, you know, long-term bull cycle. So that's going to be another, you know, decade or so of growth of the U.S. economy.
Okay.
So that being said, you know, they bring inflation down 2-3%. They can print more money. They might freeze printing for now, but they print more money. We're about to go through another growth cycle.
Gotcha.
So it's the best. Think of it this way: you're turning, you know, $1 into $3. So at that point, it's like, okay, if my dollar is worth, you know, 80 cents due to inflation, but now our economy's grown threefold.
We printed so much money these last couple of years, and I've heard stuff about, oh, this is the most money we've ever printed in history, blah blah blah. How does that kind of affect everything else?
Well, yeah, basically, you know, it's all this intertwined story. The, you know, Fed money printer obviously saved the U.S. economy during COVID.
So we needed to print that much money.
Oh, absolutely. I mean, we made a ton of capital during COVID. Just look at the valuations on number of companies. And that's kind of why we did see the pullback in the market in 22, because everything just went like this.
Yeah.
Tech would have gone through the roof. And really the reason is cheap capital.
Right.
They were trying to spur the economy on, so they brought interest rates down to near zero.
Yeah.
And when you have access to cheap capital, your most speculative ideas are going to flourish, and that's what we saw. That's why, you know, you saw so many companies double, triple in value almost, you know, overnight.
Right.
And then last year we started to see everything come back because the interest rates started going up. So now it starts costing you a lot more money to take that same type of risk. So that's what happened. So we saw this kind of flip of the coin. Now the money started flowing into your more traditional sectors like, you know, energy, industrials, materials, things like that. Things that haven't historically done well, you know, over the past, say, 2 decades. But now that, you know, tech essentially got hit really hard last year, probably down 60%, 70%.
Wow.
It's the best performing asset class this year.
This year.
It's probably up about 30% this year.
Wow, so it's just the cycle.
Because it got so cheap. And that's where the money's going to go. It's going to go to where the opportunities lie.
With all this going on, where are the opportunities for somebody?
So right now there's, you know, quite a few different ways to play it. First of all, you're basically being paid to wait. You can essentially make about, you know, 5.5% on cash right now. So that's what we've been doing for a lot of our clients. Say, look, there's essentially, well, no, there's zero risk here. Zero risk to principal. It's basically a savings account. You're getting, you know, your 5%. Treasuries are paying close to 5.5%. That's tax free. So that's a great place to sit and wait while you figure out your game plan. Now, if you're a long-term person, this is where it gets interesting because, you know, a lot of areas are starting to get real cheap. Great place to start positioning. And essentially we're telling people, get that shopping list out, get it ready. Start thinking about, what do I want to own for the next 10 years?
In terms of like stocks and
stocks. Yeah, your bonds and your money markets are going to be for your short term, but it's about thinking, okay, how do I want to take advantage of what's happened, all this turmoil for my long-term portfolio
for the next 5-10 years.
And so artificial intelligence, that's going to be the new buzzword, and we honestly think it'll be pretty relevant for the next decade. NVIDIA literally went up, something like 30-40% last week.
Yeah, what's all that talk? I saw the guy had a tattoo of NVIDIA. Obviously, he has a $1 trillion company. But what is all this now? They're the 8th or 9th $1 trillion company.
Yeah. So it all ties back into AI. NVIDIA has a pretty robust, graphics processing unit, and their ARM technology is kind of the leader in the space. So that's essentially what caused the spike. They released their earnings for the quarter pretty strong. So yeah, they were a pretty good play going forward. They're not going to be the last company to see that kind of growth regarding AI. We think it's going to really, kind of be the name of the game for the next decade, probably where you see the next, $1 trillion companies appear.
So that's a good, anything AI related is probably something.
Not every AI company is going to survive.
Got it.
We saw this exact same thing happen in the 2000s where, basically the internet was a new hot thing.
Right.
Not every internet company survived.
And that's the same with cannabis, right? I mean, a lot of these guys, because I almost, you see so many of these cannabis companies, like this was about 4 or 5 years ago, go like this, and then obviously there's only a handful of survivors.
So it's about, being judicious with what you're picking. The nice thing about AI right now is everyone gets a chance to get hands-on with it right off the bat. You can kind of see what it can do right out the gate, and I think that's a pretty strong argument for its value. Is it's not like, oh, it's this mysterious thing that people are talking. No, you can go use it right away. It's about being smart, picking the right horse, picking many horses. So you've got these giant companies already. Really the companies essentially driving the S&P 500, Meta, Microsoft, Google, Apple, Amazon, who all have a pretty big vested interest in artificial intelligence already. That being said, I wouldn't say focus on only them. I think we're going to deal with regulatory issues over the next few years where these companies aren't going to be allowed to get any bigger than they currently are. Because once you're a $1 trillion company, how big do they let you get before you basically start monopolizing the entire economy? And that's what we're starting to see already. They've already started to try to break up a few of these companies. And it's worked. I mean, honestly, they did it in China with Alibaba.
Wow.
They blocked them. They split them up into a bunch of smaller companies, and these companies are flourishing. And I think that's probably what the U.S. government is going to try to do here. So a lot of these companies, their MO was, we get big, we start working on this stuff. If some small player comes in and they absolutely crush it in this field, we just go buy them. And then we have all their IP, we acquire all their talent, and we keep going. Problem with that is every time you acquire a company, your valuation gets bigger. So if they put caps on, hey, you're worth, 1.2 trillion right now, we're not going to let you get past, 1.25. That's it. That's the cap. No company in the United States is allowed to be bigger than that.
Because it gets dangerous at that point.
Yeah, well, at that point, it's like, who do you answer to? You control everything.
Right.
It kind of stifles competition, and I feel like that's where it starts becoming a problem in this country. I mean, this is supposed to be the land where anybody who has an idea can get it off the ground.
Right.
So I think that'll be a regulatory issue.
But that goes both ways, right? Because even for that $1 trillion company, it's like you don't want to limit their growth, but at the same time, you kind of have to limit their growth to even the playing field, or
well, no, I mean they would limit their growth. At that point, it's one of those things where, because think of it this way too, we're going to be running into this issue. You have these giant companies that have done these massive rounds of layoffs.
Yeah.
There's an argument to be made that those people are never getting hired again.
Really?
Because of AI.
Whoa.
Because if I can figure out a way to fire, 10,000 people, and I only need to hire back 1,000, and I can have AI replace the other 9,000, what does that look like in my bottom line?
Wow.
That suddenly becomes, I just juice my valuation by, tenfold almost to my investors.
Yeah.
That's probably what we're going to see. So that's kind of the scary part. I wouldn't say it's a scary part, because I also believe the flip side of that is AI creates new opportunities, new jobs.
Yeah.
But that's what a lot of the headlines have been saying. People are scared of what it could do. That's what they're talking about. I think you're going to see this ceiling, this cap on how big companies can get before they have to spin off and start another entity, which I think is probably the best move. It's probably a bigger opportunity to create value for the economy that way.
So that's pretty much the latest update with the economy.
Yeah. Long story short, I think it's like Buffett said: take advantage of the fear. There's a lot of fear out there right now. I think there's going to be a ton of opportunities. There's going to be a ton of money made over the next few years. This is the time to start turning over that piggy bank and figure out what horses you want to put your money on, because we're getting real close to the end of this.
All right, Kavi. So thank you so much for coming back and talking to us about the U.S. economy. That's what's happening right now, guys. You're probably seeing a lot of fear-mongering headlines. Don't listen to them. I'm sure I missed some things, and if I did, please hit it in the comments. We'll do our best to answer it. And as always, guys, like and subscribe, and we'll see you on the next one. All right, there you go. Ready?